Welcome to BuyingMiCasa. BuyingMiCasa podcast is an informational platform for home buyers. Our goal is to use social media to bring awareness to the public about the home buying process and its resources.
I'm gonna buy you one.
Right, we gotta get him one.
So, I'd like to thank and I'd like to welcome you to to be part of this podcast, BuyingMiCasa podcast. The purpose of the podcast is to educate home buyers on the process of home buying and understanding that there's a lot of resources to help home buyers, especially first-time home buyers. Well, anyways, our guest speaker is LaQuisa Burke, and she is a communication engagement.
Yeah, I'm a community engagement officer for the Massachusetts Housing Partnership, and I've been there for about 5 years.
Oh, well, let me see. I think my brain got stuff.
Yeah, you didn't introduce yourself.
Yeah, mystery man. Caramba. Well, my name is David Phelan. I am the host of BuyingMiCasa.
Oh, yes.
Isn't that a shame? Hey, that's what it worked. That's what happened on Monday.
Happy Monday.
So, LaQuisa, can you give us a little bit of how you got into this business that you're in?
All right. So a little bit about my background. I have a bachelor's degree in psychology, and then I went back to UMass Boston and got a master's certificate. It was a certificate program for gender leadership and public policy, which actually led me into finding my job at MHP. A part of my passion for me, because I am a product of generational wealth, which I'm sure we're going to talk about, which my mom owned a home in Dorchester, and she decided she wanted to go back down south and live and do her thing down south. So I ended up taking over the house, and I became, a product of that generational wealth. And over the years, as I've been renting out to people and I've been, renting below market to people and trying to help my community in the ways that I can by offering like a lower than market rent, I saw that, I wanted to have more of an impact. So when I went to school and I learned about like public policy, I found that, the best changes that you can make is through policy. So when I found the opportunity to work at MHP, which highly focuses on affordable housing and helping people get into home ownership for a lower to moderate income bracket, a borrower, I thought that this would be a perfect fit for me, considering that I am a product of generational wealth as being an African American woman. My mom was an African American woman. She was a single mom raising me. So the fact that I was able to, have this home and help other people, I felt that, being at MHP would help me to have a bigger impact on my community. Not to mention that I work in my community anyway.
I see. Wow.
Yeah, I do a lot.
I could tell. Well, one thing that I've learned with the guest speakers that I've had previously, circumstances in life bring them into this area of helping the public. Honestly, I'm going to be frank about this. And one thing I'm going to tell you that we're going to try not to do too much editing. I want people to be live. I want to see all the mistakes, all the crannies, all the holes, all the misstep. I don't want it to be perfect.
As natural as possible.
Right. So I'm going to be as blunt. My bluntness goes like this. I would not interview someone that feels that they're above. I'm like that. That's right. Frank. If they're not part of the community, if they don't help when I have the initial conversation with them, I'm not even inviting them
to the table.
They're not coming to this
They're not coming to the table.
They have to create their own. They can call it BuyingMiCasa 2, like what Trump does from, trying to have his stuff. Well, yeah, they're going to have to BuyingMiCasa 2. You can do your own stuff, but they're not coming to this program.
Right.
You need to have those people that have a sense of community. They need to help. They have a responsibility to support. But people do that on their own. So I tell everybody I suck at selling.
Well, you're a big salesman right now. You're a big salesman.
You know, when you educate the public, you provide people with the information where they can choose. They get the right information. They have to verify the information is correct. And then at that point, they have a choice. They can make an educated decision based upon the information that was set forward to them.
Right.
And that's what I do. I avoid talking about things that I don't know about.
Right.
And I like to stick about the facts. Look at the process, look at the information, go to the sources. Because with today's life, people don't have the time to see through that. So, and they rely on individuals like you, like me, and like others.
Right.
So if we are genuine, they're safe. But we are all about the money.
Right.
Then they're not coming on this program.
They're not.
They're not coming on this program.
Right. Right.
So,
I mean, education, when you educate, right, you give them an opportunity because you're showing them a way of doing something. And once you educate, that's something that you can never take away from them. That's also information that they can pass down to other people to make them more successful in whatever their dreams would be, whether it's home ownership, new career, or whatever.
Do you realize that part of generational wealth comes from information?
Right. Right.
Without information closed that gap for generational wealth.
Exactly.
So,
if my mother wasn't informed enough to buy a home, then I wouldn't be informed now to be like, okay, well, I see how this works. Let's buy another home, or, you know, be able to offer something back to my community as well.
Leverage your equity.
Yeah.
Part of that equity is information.
Right.
Information is equitable all the time.
All the time.
Including, even if it's the wrong information, then that's a negative equity for you. So, but let's get down to business.
Down to business.
And I'm glad finally we get a chance to meet.
Yep.
And I'm glad you're able to share your, what got you into this path.
Yeah.
As a home buyer educator, you are, So it's a pleasure having you here. And let me get back to my notes here. So, what is MassDREAMS?
So, I guess when we talk about MassDREAMS, first we probably need to talk about the One Mortgage program, right? Because the MassDREAMS program is an extension of our One Mortgage program. It's an additional benefit to the original program, which was the One Mortgage program that has been created to help the lower to moderate income borrower. We have income limits, and we'll get more into that as we, get into the topic. But essentially, with the One Mortgage, we offer a lot of benefits in regards to it, and the MassDREAMS is going to be an addition. So some of the benefits that you would get with the One Mortgage program is, number one, is that you're going to get an interest rate discount. As you know, right now, interest rates are extremely high, and it's making it very difficult for a first-time home buyer to actually purchase a home. So anywhere that you can receive like any discounts, any extra assistance, any extra funding, I would highly recommend checking out the One Mortgage program. So the first benefit is that you're going to get an interest rate discount. The second benefit is that you're going to have a very low down payment.
No, the interest rate discount, is that dependent on the lender, or is that overall?
So you'll always get a 30-point discount. So let's say if today's interest rate was 6%, then the One Mortgage will come in around like a 5.7 or such, something like that.
So what we do, because people can understand what that 30 basis points stand for.
Right.
It's going to be based, just subtract the actual number from the interest rate.
Exactly. And that number comes from the national standard that's set by the federal government. So you can find that anywhere. You can look up national standard, pull it up on Freddie Mac, and it'll tell you the weekly rate, which is going to change from week to week. So essentially, if interest rates go up to a 7%, then the One Mortgage is going to be around a 6.7%. Whereas in the banks itself, the lenders, they usually, with a regular conventional loan, they would actually only go as low as, the government says they have to go. They don't have to give you a discount, essentially. But if there's any, lenders that are offering a discount, they're doing it for their own fruition to be part of the Community Reinvestment Act, or also they call it the CRA.
Oh yeah, that
requirements.
way they can get the credit.
Yeah, they get the CRA requirements, which is, really important that lenders, if they're going to be within a community, that they are reinvesting back into that community in some kind of way. So by them being able to offer the One Mortgage program definitely helps in that effort of like reinvestment back, because it enables people to buy within that community that they actually grew up with. Well, we hope, but with market prices going crazy every day, things get a little bit harder, but people are still buying.
One of the things when I talk to potential home buyers, they ask me a question, or they would say, well, David, the price for the house is too high, the interest rate is too high, there's hardly any property available. My friends and associates are suggesting that I don't buy now, I buy later or wait. And I tell people, you buy as is needed, because if you have urgency, your urgency is going to take precedence over the interest rate and the price.
Right, exactly. And then we also can't let the negativity, push you into waiting, right? Because when we look 2 years ago, interest rates were 2%. Housing prices were still high, but it was a 2% interest rate.
It's a slight balance.
Right. And so now the prices of the houses are kind of coming down a little bit. The interest rates are going up a little bit. So it's kind of bringing in that equal balance. And even back then, people were saying it was too high. In the 80s, when my mom bought a house, people were saying, this is ridiculous. You guys got a 12% interest rate in the 80s. You know what I mean? It was like, that was insane.
Let's not go back to the 80s, because I first came to the United States in 1980. The house that my mother bought in Northampton Avenue. Right. My mother was one heck of a fighter. I consider my mother to be a brawler.
Right.
Because she don't take it.
She'll take those.
She's a brawler, but the house was $18,000.
Right.
Was $18,000, and I can't realize. I felt like I just blinked my eye, and now we at what, $250?
Easy.
So
easy, and that's like, most houses are doubling in price, but you've like quadrupled in price. You know what I mean? From $18,000. My mom, our original house in '88 was $125,000, and even in '88 that was like a bad deal, right? Like, because people were paying $90 or they was paying $80 for the same house that she had, you know what I mean? But she still was able to make it work, you know what I mean? And she was able to get into that home ownership.
She needed to buy a home.
But she needed to buy a home. She lived with family members. She saved up money, you know what I mean? Not everybody has that opportunity that they can go and live with a family member. But if you have a family member that's like, hey, come here, do what you got to do, go live with that family member, but don't stay long. You know what I mean? You are a visitor. Don't stay long. Like, get your stuff and save your money and contribute to the household, and then go.
Don't outstay your welcome.
Yeah, don't outstay your welcome.
So one thing I can tell you is that it is very important, and for the podcast listeners and viewers,
right,
your need, your necessity comes before what other people are saying, because those individuals, they are not economists, and even economists, they have their own home, they're making good money, but your necessity comes first.
Right.
You can always make adjustment when it comes to the value. You can always make adjustment when it comes to the interest rate later in the future by refinancing. There's a lot of things that you can do, but for now, let's stick with what is needed for as funds. What funds you have available? How does it work? Is it $50,000, and then you have a $35,000 fund availability for the MassDREAMS?
Right. So that goes into the second benefit that we're going to talk about with the One Mortgage, which you'll have that very low down payment, right? So when we're talking about down payment, that's a 3% down payment, which is 3% of the purchase price. So
3% is the minimum down payment.
3% is your minimum overall down payment. 3% or 5%. So when we're asking for the 5% down, it's for 3-family houses, right?
Okay.
So if they want to buy a 3-family, it's going to be a 5% down, with 3% of that has to be their own funds.
The minimum have to be on fund. The other 2% could be a gift. Or a down payment assistance from another city.
Exactly.
Or town.
Or MassDREAMS. Exactly. And then if you wanted to buy the condo, the single, or the 2-family, it's a 3% down overall, where 1.5% has to be the borrower's minimum borrower's own funds. The other 1.5 can come from, like you said, a gift from a family member.
Money's from a down
payment
assistance from a city or town.
City or town.
And then the MassDREAMS.
Or MassDREAMS.
So a lot of home buyers don't understand that that 1.5%, which is requirement, that money needs to be in the account a minimum of about what?
90 days.
Yes.
90 days to be considered seasoned funds, to be considered your own monies.
Most lenders are looking for 60 days, but MHP1, MassDREAM, is looking for 90 days in your bank.
Yeah, we usually consider 90 days to be considered your seasoned funds, but the lenders, we will actually go, if the lender says 60 days, then we'd go with the 60 days as well.
I see that.
Yeah, so we will defer to the lender at times as long as they meet our requirements.
I see. Wow. I didn't, this is the first time I spent the weekend reviewing this and it hit me. This is awesome.
Yeah, it's one of the best programs that's available. There's nothing like this anywhere in the country. There's no other state that has been able to duplicate this particular program. And the reason why this program is so great is because MHP has been able to work with the lenders to offer that interest rate discounts. I mean, what lender wants to offer you a discount, right? They're trying to make as much money as possible. And they're like, what? You want us to give a discount? Like, why would we do that? But, it does help with their CRA requirements, that Community Reinvestment Act, by them actually signing on to offer this program because you're helping the people that you're saying that you're supposed to be helping.
You know what? I'm going to add that to my list so we can talk about CRA the next, possibly the next couple of podcasts.
Yes, definitely.
But I think we're going to need to do a couple more podcasts regarding the requirements, the specifics and things, because this is so detailed. We can't just do it maybe in about 20-30 minutes.
Yeah, definitely.
But I can tell you one thing though, that 3% down is awesome. Minimum is 1.5% for down payment. Money needs to be in account for a minimum of 60 to 90 days, which is 3 months, 2 to 3 months. Now, I think we can talk about the area median income. What is a brief definition of the area median income?
But before we get into income, I have to mention one of the best benefits of the One Mortgage. There's no private mortgage insurance.
Oh, we get into that. Don't worry about that.
So we got to get into that.
That is part 2, because when it comes to doing a calculation, the income requirement, the DTI, having no mortgage insurance is the best.
Yes.
Okay? Because it saves a whole lot.
Yeah.
But what is the brief definition of area median income, what they call AMI?
AMI. So when we're talking about the area median income, it's basically the average that the government is considering the income to be based upon, how many people you have, the census, and how many people, and then they will base that based on how many people you have in your household. So they may say, for the city of Boston, they may say only one person can make a maximum of $98,000 to stay under that 100% area median income. So essentially, it is it's the average of what the government will.
That will be the average between the poorest income to the richest
income.
So
but for a particular, I guess
no more
certain
than
areas, certain areas, because every area is going to change, right?
Every region is different.
Exactly.
Because the census is based upon the region.
Exactly.
So they do the calculation. Let's say they got Springfield, Western Massachusetts.
Right.
Then you have Berkshires. Then you have Worcester. You have
Suffolk
Framingham,
County.
Suffolk County, and Harris County. So each one of those, they do a census to determine what is the poorest income.
Yep.
What are the richest one?
Exactly.
And then they find the average, and that would be the median.
The median income. Exactly.
Okay. So, and that is based upon a household of no more than 4. That's what they do the average, more than 4. That's what they do the calculation.
But on our income limits, we actually go out, I want to say the household size goes up to about 9. You know what I mean? 9 people in a household. Okay. So they'll go all the way up based on how many people you actually have in the household. So it's not necessarily has to be 4 people. You know what I mean? So every class will have its own little income limit.
So that seems to be okay because couple of down payment programs offered by some lenders.
Yeah.
They are looking at 80% of the area medium income. So let's say that the area medium income is $100,000.
Right.
They do 80% of that, so it would be like no more than 80%.
$80,000. Yeah.
$80,000.
$80,000.
So they cut it even shorter.
Right. And then if you're just only going to a 80% area median income, then what's going to happen is that you're missing those people from 80 to 100. You know what I mean? Because those people that are between that 80 and 100, they can't qualify for that stuff under that 80% area median income. Right.
People can qualify.
Exactly. So that's why our program goes up to that 100% area median income,
which is good,
to make it easier for people.
Now, during the podcast, you're going to be sharing with the listeners and viewers where they can find the information for the area medium income, so they can see what county they live in and what city and what county,
exactly,
and how much their income is going to be affordable, how much they can qualify if their income is eligible per household. Mm-hmm. When it comes to per household, is it 15 years and above or 18?
So income, every member is going to count as a household, but income, if they're over 18, and they're working full time, we're going to count their income. But if they're a full time student and they're working full time, we won't count their income.
What about if they have part time income?
We will count part time income. We'll look at it as the overall income. Sometimes they may not let you use it for qualifications because they say that when you work a part time job, you need to be there for at least 2 years to use the income.
Minimum 3 years.
Yeah,
to use
a minimum
income.
3 years to use it as part of your
only
income.
if the name goes on the application.
Exactly.
But since your name is not going on the application, so they're going to do it at 2 years of the income.
Yeah,
part-time income.
So they'll look at overall income. So if it's like, say you, your wife, and you have a mother-in-law, somebody that's living with you, and you have a 19-year-old, going to school or something. Anybody who's working, they're gonna be like,
ages 18 and up.
18 and up, they're gonna count all of their income.
Okay.
And if you have like child support and stuff like that too, that will also be counted.
All right, so that's very interesting because a lot of people don't know why. They ask, why do I have to count my grandmother? Why do I have to count my uncle or my niece, my sister income? Their name is not on the mortgage.
Right.
But the idea is that the combined people in the home is going to help in paying that mortgage and taking care of the other financial responsibility that comes as a home ownership.
Right.
So that's what the idea is. And the idea is correct because if I'm living with somebody, that what we say in Panama, we scratch in.
Right.
So you have to contribute.
You got to contribute. Everybody got to contribute a little something.
Exactly. So that's what they're counting on. And I think before we go into the second part, I believe that we will open up by talking about, in the second half, we'll talk about the one mortgage. And what are the, where people can apply and what are the process for application, so we can describe the process so people can understand it. Because I know there's a lot of websites, and this probably one of the first time I've seen a lot of friendly websites for people to walk through. Simple. For the pre-screening and how that process works.
Exactly.
And that pre-screening will work not only for the MassDREAM, but it also will work for the one mortgage.
So the MassDREAMS is the only program where you will fill out the eligibility questionnaire.
Yes.
That will be the only program where you would have to do that. If you want to get qualified for the one mortgage, then, once you're ready, you go to the lender and they'll collect all your documents, and that's how you get qualified for one mortgage, through the lender. And then if you qualify, if you're eligible for the MassDREAMS, you take the letter that you get from filling out that questionnaire. You take that to the lender, then they're going to add the MassDREAMS funds onto your one mortgage loan.
That process will happen when you have a contract or before? So
MHP is actually able to qualify people with the MassDREAMS money at the beginning of our process. So at the pre-qualification process, we'll be able to see how much funding you'll get from MassDREAMS.
Well, let me be a little bit more specific. Do they need to have a signed contract before?
No, they
can
don't.
Do that before they sign contract.
Yeah, they can
so
get
that money
qualified.
could be set aside for them.
Exactly. So when you come in and you go for your pre-qualification, the way that MHP works is that we're going to qualify you at the beginning for the MassDREAMS fund. Whereas in Mass Housing, I want to say they actually need that purchase and sales before they will actually fund you the money. But we're able to figure out how much we're going to able to give you at the beginning process. So that makes it a little bit easier. We just got to get the approval from the city, and we do all of that at the beginning.
So it will be best for the person to have a pre-approval from the bank, go through all the first-time homebuyers program, all that stuff taken care of, which we're going to talk about in the second half,
right,
before they go to the pre-screening.
No, they can do it all simultaneously.
Okay.
Everything can be done all at one time. So if you go to the bank, you say, "Hey, I want to qualify for the one mortgage." They're gonna say, "Okay, give me all your documents. Do you live in the 29 gated communities? If so, fill out the questionnaire, send that to me, and then we're gonna add that onto your application as we're processing everything."
Well, LaQuisa, I believe we're going to take end this first half.
Sounds good.
The second half is going to be about the one mortgage and other specific, requirements. A little bit. We talk a little bit about the process of the pre-screening process, and then we talk about the MHP one, which I know that's your baby.
The one mortgage is my baby. Yes, I love to talk about the one mortgage.
So I hope that when I begin the second half, I don't fumble the introduction and think people is going to read my mind and say, "Yeah, we know this is David Field, but I'll make sure I do a much better introduction." Well, this is the first half. We talk about this is LaQuisa Burke, which is a community engagement.
Yep.
Yeah. And for MHP1, which is Massachusetts Housing Partnership, and everybody know it as One Mortgage.
Yes.
Yes, and they're located in Boston, Massachusetts. And I am David Faley, the host of BuyingMiCasa. And LaQuisa, thank you very much. And let's take a quick break, and then we'll go back into the second half where we talk about the One Mortgage program.
Sounds wonderful. Thank
you
you for having me.
Welcome.
This is great.